Good day, Money Masters and Treasure Hunters. Welcome to the July 14th magnificent Monday edition of the Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom this evening. I'm the morning anchor that gets things kicked off here at TFNN each and every day. And I have a newsletter service called Mastering Probability. It's out each morning by 8 a.m. I'll be filling in for Tom this afternoon, and I am grateful for your presence here today. Now, my outcome during the next couple hours is to teach you how to master the tools for trading. That includes the tools of the mind. Because when we master the tools of our mind, we begin to think like a strategist. During the next hour, you'll hear me use tactical tools, things like A to B equals CD patterns. We'll look at swing points. We'll take a look at Fibonacci retracements and expansions, Gartley butterfly patterns, and, of course, we'll use Japanese candlesticks because they are the signs that the bulls and bears make for you and I each and every trading session. Our call number is 877-927-6648. Give me a call, folks, if you'd like. Happy to take a look at your stock chart. We had the Dow finish off 112 points. Up 112 points. How about that? You thought maybe you turned it into the wrong show. We had the Dow up 111 points, closing out at 17,055. The S&P up 9.5, trading out at 1977. Nasdaq Composite up 25 points. It closed at 44.40. Russell 2000 up $5.60. It closed at 11.65. NDX 100 up 24. New York Stock Exchange up 55 points, but on light market breadth, only 880 net advancing issues. It needed some 2,300, 2,400 in order for the bulls to actually take back control of the marketplace. Of course, gold finishing down. Right now it's off $29, trading out at $13.08. Silver's off 48 cents. It's trading at $20.98. Light sweet crude relatively flat, up 19 pennies at 101.02. All right. So where are we going to start? What are we going to look at here? I think the most important chart, let me go ahead and put that on the screen for you. The most important chart for us to take a look at is the QQQ. We'll take a look at the NQ. We'll take a look at the Qs out here. Now, the reason that I say that is this. Today we had the Qs up on very light volume. It's a Monday. It's a summertime, so you expect volume to be light. But today the Qs did 18.2 million shares. When price was last up here, happened to be July 3rd. July 3rd was a trading session that went from 9:30 in the morning until 1 o'clock in the afternoon. On that trading session, it did nearly 15 million shares on a much lighter, much shortened trading session out here. The reason that I point this out is that the Qs have a volume characteristic unlike any other. And the volume characteristic goes like this. The Qs make highs on light volume. The Qs make lows on heavy volume. Now, if you're watching this on Tiger TV, I hope that you are, what you see is a butterfly pattern as well. That butterfly pattern, which has been drawn on my chart here for what seems like forever, has a price objective of around 96.30. The actual high that we saw today was 96.06. So, does that mean that that's a 1.618 butterfly? Does it mean if price gets to 96.30, 33, 35, 40, somewhere around there, the price is automatically going to reverse? The answer is no, but this is the strongest of the four indices out here. And the strongest of the four, which has a characteristic of making a high with light volume, it had that today. And in essence, it really completed this 1.618 butterfly. Like any pattern out there, though, you need some kind of reversal signal in order to pull the trigger, because there is no reversal signal. There's only the potential right here with regard to the pattern that was formed. Now let's go switch back over. We'll take a look at a different chart. Let's go take a look at the NQ. Let's take a look at the futures contract out here. Pull that up here in just a moment. We want to see where that is trading. 39.20 is the number inside of the NQ. Oh, pop up on my screen for me. Oh, looks like I deleted the chart. Did not mean to do that. Let's go ahead. We'll put the daily up here. Just give me a moment to switch over to the daily time frame. So we've got the NQ trading at 3920.75. Got the futures contract that'll close here in a bit. The key number inside of the NASDAQ. Give me a moment here to put one more thing up on my chart. Style. Do that one more time. There we go. What I want to take a look at here is our TAS signal box market profile. You're going to see that price right now is ever so close to trying to get above resistance. Actually, it's trading just above resistance. 39.18 is the number out here. Now, closing above 39.18, would give you more promise from the bullish side of the picture, and you're really trading just about on that number. You're 39.2075. That's not exactly taken on the resistance area with any kind of conviction. You'll see here if we go take a look at, and that's really what was needed today in order, even though we've had a big market move, that's still what was needed in order to be able to break above a resistance level. So the combination of the Qs on light volume, the NASDAQ that really hasn't broken above resistance out here, then you combine that with what's going on under the covers inside the S&P 500. If we take a look at that right now, you'll see that price today got up to a high inside the ES Mini, got up to a high of 1974. Interestingly enough, 1974 is the exact number on the spot for resistance. So it has not broken above resistance on a day like today. Now, you're coming back tomorrow, should be heavier volume. The question is going to be, is that going to be volume moving higher or volume to the downside out here? What I can tell you is on 2 of the 4 that we've taken a look at out here, meaning the Qs, the NQ, now the ES Mini, it hasn't really given us that sign of truly breaking out. Let's go take a look at the message inside the Russell 2000. Russell 2000 inside the futures contract, trading up about 6 points right now. We're going to see the Russell 2000 did the resistance area, which used to be old support inside of this, which the Russell broke, by the way, on July the 8th when it moved to the downside here. Today what it did was it got up to a high of 1170. 1175 is the old support area. Old support is now resistance. In order for the Qs to join in on this party here, they really need to, the Qs, the Russell 2000, it really needs to close above 1175. It was not able to accomplish that task today. If we take a look at the Dow, a little different picture out here. The Dow is really the strong indice at the moment from the standpoint of taking out a market profile, but what it didn't do, interestingly enough, didn't close above the swing point. So the swing point that I'm looking at is from July the 3rd, and that high is 16,994. You're at 16,978. It traded above that today, but it gave it up. Volume today inside the Dow futures, 104,000 contracts that traded. Versus July 3rd, again, a shortened trading session, 74,000 contracts, but it wasn't able to close above that. Now, look, the Dow here is making a higher high. It's doing it on less relative strength. That's never a good scene, but that can resolve itself over time, over days out there. But it really, today was an opportunity to get above a swing point. The Dow itself didn't do it, and that's really the strong indice out here. That's certainly the strong futures contract. So that's what's going on there. If we go take a look at what's going on inside the gold complex, we had gold traded down as low today as a price level of, let's blow this up on my screen out here. It came down to a price point of 1302.20. Now, here's what gold did. I'm going to put up a couple of different charts for us. We're going to take a look at the daily chart here for the gold contract. I want to put that up on my screen here. It's one of the Rhodes momentum indicator signals out here. So if you're watching us on Tiger TV, I've got the continuous contract for gold up on my screen. You're going to notice a couple of different patterns out here. Number one, when we go back to the lows out here in the marketplace, give me a moment here. We take a look at the lows that were put in back here, December 31st. You'll see that price was moving down on less relative weakness. If you're watching this on Tiger TV, the bottom of my chart is the relative strength index. It's over a period of 14 days. Helps us really to identify the momentum, the real oomph. It's a momentum indicator. Helps us to identify the momentum of the marketplace out there. And you can see that it was pushing lower with less relative strength. At the highs out here, you can see that on the highs that I'm referring to now, March 17th, it was pushing higher with less relative strength out here. So at the bottom, less relative weakness. At the top, less relative strength. And guess what the pattern is here today? As price was moving up into July 10th, it was moving higher with less relative strength. And today, big old bearish engulfing candle. This engulfed today's session, took us all the way back into the breakout area, that breakout area from June 19th out here. We get back from this first break. Let's go dive down into Goldilocks. Let's take a look at a 240-minute chart, maybe a 120-minute chart, and let's see what the message there is. Because I believe that Goldilocks broke through its rising price channel. Something to think about. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.